All right, what's up, everybody? Welcome to the weekly recap where we're going to be breaking down this week's levels, areas of value. We're going to be breaking down our edge. We're going to be breaking down how to identify market conditions. We're going to be breaking down some winning trades, losing trades, amazing trades, shitty trades, tons of stuff like that. So definitely a really, really different sort of week. Really good week. Tons of opportunity. Tons of fake outs. Maybe it's just me. You guys seen a lot of fake out breakouts this week?
Yeah. This is why.
A little
This is
bit,
why you
right?
gotta eliminate noise. Gotta
Yeah,
eliminate noise in the market.
abs-
That's been a big one the last 2 weeks.
absolutely. So, but one thing I identified is on the daily, guys, man, we are starting to make some progress towards some very strong supply zones that if and when we can get through, the market's going to, it could really get very bullish. Now, this is one of the things I want to touch on, right? And this kind of happened to me last week, is when you start to enter supply zones, right? Like especially on the daily time frame, right? So you can see we had this 415 level on SPY. When you start to enter supply zones, try very hard to not assume sellers are going to step up, right? So I just want to break down a quick little scenario of that on QQQ. So QQQ, we were, entering. Actually, I think it was SPY. I'm not sure what, but basically, in a nutshell, just because you are in supply doesn't mean sellers are going to show up, right? So we're going to break down some uh, examples of that. Here it was right here. It was on Thursday when we were just ripping through supply zones. And just because you are entering an area of value doesn't mean that buyers or sellers need to step up. That is where the importance of identifying your candlestick analysis, right, comes into play. Darren, that 5-minute candle has been life changing.
Yep.
Really helps to identify market conditions. We seen it Friday, right? So I played a short on QQQ on Friday. It was off VWAP. Let me just throw it in there real quick. So price came down below VWAP, right? This is when I took the market short, and the old Josh would have just gotten out right here at 317.80, which still was a great move. $1 on the QQQs, around like 100%. But on the 5-minute, right? This isn't a candle that you really is bullish. So why get out? Why get out of a short position if this candle is still extremely bearish, right? So, I kind of want to talk on that, right? And, the importance of waiting for that candle to close. Definitely a game changer. Definitely really helps you understand the overall market. Because if you're trading on the 1 minute, things can get very tricky. Obviously, sometimes you do have to trade on the 1 minute, but yeah, so really good
Yeah.
stuff.
The other thing the 5 minute candles help me on is yes. If I wait for more confirmation, for example, two candles telling me that a trend is starting. If I wait for two candles to show up, yeah, I'm going to be losing a little bit of movement. However, I will be taking less trades or more trades that are higher probability.
Yes.
And I think in the long run, that's going to benefit my equity curve because
Yes.
I'll just be eliminating more of those random trades,
Yes.
eliminating randomness from my decision making,
Yeah.
and making more high quality trades. That's what I'm trying to say.
Absolutely. I like that random word, right? So when you trade off random, obviously no one wants to trade randomly, but you may think you aren't. But if you are, and I'm guilty of it too, right? If you are entering trades before the candle closes, you are taking a risk. You are adding a lot of risk, right? So it's you're not getting the full story. So we've looked at this, tons of times. In hindsight's 2020, because obviously all these candles are here. But within the last 2 to 3 minutes on a 5-minute candle, you will see either buyers extremely strong or sellers extremely strong, right? So a lot of these candles that are green right here started off red, and then buyers came in with strength, right? So that those last 2 minutes are very strong. They're really important. That's why that basing candle is so important, because you'll see the last 2 minutes of the candle, right? So we took this short, and then the 5 minute candle here, buyers came in extremely strong, getting above this 411 area, right? Clear indicator that buyers were stepping up. Good time to get out of your short, right? So it's all about being able to use these candles to understand the story the market's telling you, right? So it's obviously a skill that takes time, but you know, just really good stuff. I've been doing that 5 minute candle. It's been working very well for me. So I want to start right here on Monday, which was April 10th, right? This was a really good day. I'm actually making a little mini course, right? It's going to be free, but on demand, basically all of our strategies, right? Supply rejection, demand rejection, break and retest, VWAP rejections, pre-market high low, right? So I'm going to make all these courses, and this is actually the example I'm going to use for the demand rejection here, because it's a prime time perfect example. So going into this day, right? This is kind of what it looked like on April 10th. So we had buyers here at 406, right? And we're just going to break down and really flesh out how at least how I traded this day. So based on the prior 2 days, right? So we're looking at this like this is pre-market and we're getting ready to trade April 10th. So looking at April 5th and 6th, which was Thursday and Friday of the week both prior, we got these buyers to step up at this 406 level twice. Right. So what's that telling us, right? So we got this perfect double bottom here, right? That's telling us that buyers really like this area. If we break down, we'll break down in the 5 minute, right? I want to look at the whole volume aspect of it as well, because I could guarantee you that buyers really stepped up with volume. So looking at these 2 prior days, right? You can see buyers stepped up in this 406 area very well. On last Friday, we got a lot of extra volume here as well. Look at that huge volume spike getting above VWAP, right? So we use these areas of value with chart patterns and with volume to really solidify our edge in what we're looking at in the market, right? So that was the days prior to Monday. So going forward, right, this being pre-market, I had supply mapped out here. If and when price can come down to 406, I'm looking for longs. So we'll just kind of run through how the day played out. So immediately we open and we come down into 406 and we start to get these basing candles again, right? So obviously one thing I've been working on is being patient, waiting for the retest, right? Waiting for extra confirmation to get in a trade. Because just hopping in right here leaves you very vulnerable still, right? So waiting gave us that perfect double bottom there. And then this very large engulfing buying candle above VWAP. This is a perfect indicator to take the market long, right? This is our edge. This is what I look for every single day, right? Whether it's in supply or whether it's in demand. One cool thing to notice here is price cannot make a lower low, right? That's another very good way to understand that buyers are in control and there's probably going to be a large move to the upside, right? So we got demand. We got a low of 405.96, right? Right at that 406 level, which was vital the day prior, right? The days kind of almost looks very similar. And this is just the market auction, right? So, and one thing I want to talk about is the volume really picked up in this area. Now, why does that matter, right? So volume matters so much because this volume is telling you that large money, right? Either a bank, institution, a market influencer, right, is stepping up to the scene, right? So us as retail, we cannot move the market. We must learn to identify large money, right? So seeing this volume, right? And I know some people may say, like, how could you tell? It's higher than normal, right? So you can see in the beginning of the day, we had volume around 1.12 million per 5 minutes. And then it dips down here to 0.6 million, right? So like 600,000 shares being bought or sold within 5 minutes, and then rips all the way up to 1.6 million, right? So with this large spike in volume, that's telling us that this area is of interest and it's valuable, right? So that is where the volume aspect plays a role in our strategy, right? So going forward, we're looking for volume to pick up in this area again, because price can come down to demand, but if volume and buyers don't step up, it's useless, right? So it's really important to understand that, right? So I just kind of wanted to break that down. So so now this is what the day's kind of looking like. We get this large engulfing buying candle. And then even after seeing this, you don't have to chase buyers, right? The way I traded this day is then I waited for price to come down and test VWAP and reject it, right? So that was like that was confirmation right there that sellers tried, they could not prevail. Took the market long, and then look at the roll that price. And so hold on, let me back up. So taking the market long here, my stop loss is going to be below low of day, right? So I'm now risking around, what is that, 50 cents to make a potential. My supply zone's up at 409.50. So I'm risking 50 cents to make $3. So that's very good risk to reward. That's how you kind of want to map it out. That's how I map it out, right? Do not go into a trade without your stop loss predefined and your target. I think it's very important to have a trade plan where you have your entry mapped out, your target mapped out, your stop loss mapped out. What that does is really solidify what your plan is. This way you can stick to your plan and crush your plan. If you just go, there's a double bottom in demand, I'm going long, and then sellers come in, and you're like, oh my God, sellers came in. This was a perfect trade. I should have killed it, but now sellers are here, and I'm down 70%. What do I do? Screw it, I'll hold on for the rest of the day, and then you lose your whole bag, right? So that's what we do not want. And the way we don't do that is with stop losses, right? So really important to know exactly where you're getting out of this trade. And then you can see, right, that the buyers really stepped up right here, and that turned out to be an extremely important area of value, right? And the importance of having your stop loss mapped out is that's the only place you get out of the trade other than your target. So even though price comes down, there's no reason to get out of this trade still. Even though right here you're up, 50%, and then it tanks, and now maybe here you're down 10%, there's really still no reason to get out of this trade. Your trade plan has not been invalidated, right? So, and then price continued to rally all the way up to 409. So,
Josh, I got a question about stop losses on this one, and yes. I think it will apply this day.
Yes.
So I don't know what other people do. I trade 0-day options a lot. Sometimes I trade, if I'm swinging, I'll do 1-2 days out, but I do 0 days a lot. And in this scenario, let's say you waited, you saw the one Bayesian candle in the second 5 minute, and then you got in after this big Bayesian candle.
This one right here.
So yeah, so now your stop loss is by your dotted line there, 405.96. But I also have this rule where I don't like to let my losers get more than 30%.
Yes.
So now I know there's been multiple times where that 30% loss will come before my trade plan is invalidated, especially if price kind of doesn't make your full move that you want or doesn't hit your target and until much later in the day where time decay has eaten away at your premiums.
Yeah.
So like how do you – that's – like this has happened to me multiple times lately, and I'm just not really sure how I should do it because I've got these two rules. I don't like to get out until my plan is invalidated, and I also don't like to let my losers go more than 30%. But sometimes those two conflict.
So basically, so it's really important, right? I love that rule of the 30% rule. That's super important. Now, this is going to kind of based on your entry and strike price, and obviously the time of the day, right? So going long right here, say you go long right here at 406.23, and you buy the 406 in the money call options, right? Which is going to protect you from getting hurt extremely bad, right? So
Yes.
that's what I've been doing. So I buy directly in the money. So buying in the money is going to give you a higher delta or a higher return, and your premiums aren't going to diminish, right? Even though they cost a little more, you should be able. So I think it's 70 cents makes me around 30 to 50% profit on an option, maybe less. So it should be the same, somewhat the same, going the opposite way. So now I can't afford to get in a dollar above my stop, right? That's why, like I was saying, risk 50 cents to make three, right? The most I'm really going to risk on a trade is 50 cents in the wrong direction, because anything higher than 50 cents is going to be higher than your 30% loss.
True.
So, and
so protect yourself by buying in the money as opposed to at the money.
Yeah, absolutely.
Or worse.
Absolutely. And if I'm
out of the money.
right, so and another thing, if I'm taking trades like in the afternoon, unless I'm trying to scalp very quickly, I'll buy the next day contracts, because we all know you go long right here at 12.15. You're in the money options are going to be around like 60 cents, right? And they could go down to 20 very quickly on when sellers coming in. So and one thing I do is I'll put a hard stop in. So I'll buy my options, right, for I think these options cost me around like $120, and I will literally put a hard stop at $95. So no matter what, I'm out. And if I miss the trade, that's on me in my entry, right? I entered too late. Sometimes, yeah, we like to wait for higher confirmation, but at the same time, that there's a price on everything. If you want to wait for the perfect trade, you're gonna have to be willing, right? And what I mean by wait on the perfect trade is wait for very large confirmation, right? So say you wanted to wait to the end of this candle to go long to really validate buyers were here, right? So you were like, okay, we're gonna wait from 406 to 4075. And now you potentially have put yourself in a situation where you have to wait until here, right? Like if I'm going long right here, I can't stop out here, right? I have to wait till here, otherwise I'm going to miss this move, right? So if and we all have different styles, right? I tend to enter trades rather quickly, but keep a very tight stop. This way, I capture larger moves, and I don't put myself in these sort of situations where you enter right here, and you potentially now have to hold for at least $1, right? Because I can't get stopped out right above my 406 level, because that price, there's a high probability that buyers are going to step back up. So yeah, in the money, and around 50 to 60 cents.
I think it's all about just like developing your style and figuring out like how much you specifically are willing to risk to see if a trade works out.
Absolutely.
And obviously you need that all figured out before you actually enter the trade.
Yeah. Well, in one of the main ways I do it, right? So basically, based off what I'm trying to capture here, right? So if you look at the day prior, right, we had this huge rejection off this 406 level, actually 405.70, right? So to be 100% like to be completely honest, price could have came all the way down to 405.70 as well, and buyers could have still showed up. Now, why didn't I wait for 405.70 then? And basically, it's because we got this perfect double bottom here, and this is where these chart patterns come into play. because a chart pattern is nothing but selective human behavior, right? So what that means in a nutshell is this chart pattern is showing you that buyers are taking control of the market, right? So once price comes down and rejects this 405 level, right? Let me get out of this real quick. So, and price cannot make a lower low. This is telling me, hey, buyers are strong here. Based on my trade plan of going long, I'm going to go long here, keep my stop below the day's lows, and potentially, actually, my stop will be yesterday's lows. And that's just what I'm comfortable with based on what I've seen, right? I really like how you said it's all about you developing your own style, right? So based on my years of trading and my conviction, my journal, my trades, this is what works for me. This is what I'm comfortable with. And yeah, and basically for everybody out there listening, you develop this on your own merit, right? Like Todd, I know that you give no tolerance, right? Didn't you say I'm 1 minute goes 1 minute opposite direction, you're out?
Yeah.
Yeah.
Yeah. But doing that, you got to be, like I said, you got to be in the right location.
Exactly.
Your action is.
Yeah, your entries got to be on point. And
yeah, it's almost like I try to take entries where, say, I'm in a zone and I take a long entry. Most of the time, if I'm wrong, it's the perfect short entry.
Yeah, right. Yeah, that's a very good point. Yeah, no, that's.
That's kind of like the break and retest. It's going to go one way or the other.
Yeah.
But if it breaks the other way that I'm looking for it to go, I'll wait for it to come back to that same area and take it in that direction.
Yeah, and that's a perfect indication. So we seen that Friday, right? With and we're gonna get to that, right? But we seen that Friday at this level, right here, and on QQ or what was it? This level right here. So pre-market low of 412.52, right? Let me just get rid of all these. It's kind of confusing. We'll get back to these lines later because they played a seriously important role. But yeah, so we got this pre-market. We got this pre-market low area here at 412.43. This could have been a area to take the market long, right? And you could see, look at the candles. A lot of people did. A lot of people were like, oh, no, this is it. And then once we broke below it, look at perfect break and retest, and the market sold off for the rest of the day, right? So, or not the rest of the day, but till the next area of value.
Most of my trades, that's the one I'm taking.
Yeah.
And if I'm looking at that level, if it bounces, I'm good. If it breaks it, I'm just looking for the retest.
Yep. Yeah. So yeah, that's another perfect thing, right? So yeah, and that's pretty much how Thursday went. I actually ended up I didn't stay all the way in until 409. I took profits rather early. I think because let me just see what was going on QQQ, and the reason I checked QQQ is because I'm constantly looking. I'm constantly looking at both. So every time I'm looking at SPY, I'm looking at QQQ, right? I use these both to really validate each other, right? And so we talk about that a lot, right? It's comparing market conditions, right? And we've really seen a lot of discrepancies lately, right? I mean, Darren, you noticed it. Sometimes QQQ is moving sideways and SPY is selling off, right? So I think there's a lot more behind that, right? So
But one more thing about this day. What was it? Maybe Tuesday. What was the day?
The day we were just talking about?
410.
Yeah.
So if you look, 4.5, we had a small rejection off of that demand zone.
Yeah.
Then, I guess this was Friday, right? 4.6.
Yes.
We had an even bigger rejection off that demand zone.
Yeah.
And then the next day we had an even bigger rejection. So basically, if you look at how price reacts, so there's been times in the past where we've had a demand zone, but the bounce off it has been weaker every time.
Right.
Weaker. Yes. Then you would you would depend on that demand zone much less, as opposed to this scenario where every time we do touch the demand zone, we push out of it stronger.
Yeah.
So that basically proves to you that is a key level. And I mean, look at the next time we came down to it. I mean, we didn't even touch it. You know, and then we had, So this is a key level going forward. It really is.
Absolutely.
Because I mean, if you test out something 3 times, and this is pretty. I mean, the market's been trending great lately, and if we're pushing off of demand zones with this kind of continued strength, I just think that's a really good sign.
Yeah, because we. Go ahead, Todd.
That's that 4,100 area on the future too. That's very strong.
Yeah. And you know what that's telling, and I love how you put that. So we use this to give us our overall context of the market, right? So a lot of people, you know, they'll call it trade with trend, right? But in reality, the way I look at it is I like to get the overall market conditions and temperature. And we obviously trade these trades day in and day out, right? Demand rejection, supply rejection. You know, we are constantly looking for these. And I love what you did there, Darren. So what you're doing is you're going, hey, at 406, we got to move. What do we get? We got a $1.70 move the first time, right? So buyers stepped up, bought it for $1, you know, $1.70, right? And then next time sellers brought it here, buyers said, okay, you want to come back to my zone? We're going to crack you for $3, right? Or I'm sorry, $3.50, right? So buyers really got stronger here. And then sellers come back. We can't even make it all the way down to 405.60. We at 406 they step in, and then we buyers rip all the way up for $4.15. And what's that telling us is that buyers it's getting stronger, and then we get a gap up the next day, and then another gap up the next day, right? Yeah, that was a really good observation. Yeah, that was.
Yeah, that's market context basically. Yes. That's one of those things that I go through every single day when I put on a trade.
Absolutely, and so we talk about it all the time, right? Step 1: identify market conditions and context. That's exactly what you want to do. And then, so that was Monday. Tuesday, and we've been seeing this, right? And we talked about it, the break and retest on a larger time frame, right? So prior, let me just get this right real quick, because this is a perfect example of the market breaking areas of value and then using them, right? So we had supply over here at 409.50, right? So we call that supply because there's a sell-off, right? Sell-off at 409.50, sell-off at 409.50. Then we break it, right? So once we break the supply zone, it now turns to demand. Right? So now, just because we broke a supply zone, don't take it off your chart. Leave it. Because you can see what happens. Price rips, comes down, right? And now buyers are now defending that area with strength, right? You can see it happen twice. Came down, or I'm sorry, 3 times, right? Hit it right here, 409.50, rip. Comes down a little more, but couldn't completely defend it. Or I'm sorry, buyers completely defended it, took it up, comes down again. And then we get crazy CPI day, right? And but yeah, that break and retest is lovely. It's really important to, once again, don't think it's going to come down to a perfect cent. It usually doesn't. And the reason that is because it's really important to remember that this is nothing but an auction. This is nothing other than buyers versus sellers. That's it. So when buyers are buying them, sellers are still selling. They're just not as strong, right? So, sometimes we do see perfect bounces like this 406 level, but sometimes it's a little more sloppy. And that's okay. That's why it's really good. It's really important to be able to look at these candlesticks and go, all right, what are they telling me? Right? Like, what are these candlesticks telling me? That's another reason why a lot of people get so hung up and they go, oh, my zones aren't perfect, or, how do I trust them? And in reality, your zones don't have to be perfect. They just have to be in an overall general area, right, of where you're looking for price to make a reversal or a continuation, right? And I want to touch on that because sometimes I get accustomed to only expecting reversals, and I paid for that, right? And we're going to get into that. But so yeah, we'll just break down. Actually, we'll just jump into that. So where was it? That ABCD pattern, right? So we're going to go to Thursday real quick. So Thursday, right, was a lot of ABCD going on, right? And for everybody that doesn't know what that is, right? So an ABCD pattern is a continuation pattern, right? It's a rip, consolidate sort of thing. A lot of break and retest, and this day was really cool. So you could see off the rip, we had buyers that were very strong, right? They were defending this area really strong right here. This was 408.71. They were defending VWAP, right? Very strong. Really good indication, take the market long. One thing I want to talk about real quick before we go any further is this day, right, was one of the days where there was a lot of supply ahead of us, and I kind of let that alter my trading, right? And I want to talk about it. So this is what the day kind of looked like. So we had this massive sell-off back from the CPI day, right? It's kind of like this whole zone up here, right, where I was expecting sellers to come in at 411. So once again, right, this is not, and this goes back to market perception and how you visualize the market and perceive the information that it's telling you. So price rips right into 411. This is when I chose to take the market short and got stopped out of my trade very quickly. I took a really short loss, and anytime I get in a trade, I set a hard stop immediately. So no matter what, I'm not letting this trade get out of hand. I automatically take a 5% loss, sometimes even less, because sometimes as well, basically what I do is I'll enter this trade short and I'll put a trailing stop in, right? And this is just where it works for me, right? Everybody's different. So I'll put in a trailing stop for plus or minus $15, right? So about 15%. So as price goes up, right, and the sellers come in, I'm up around 10% right here. And then once price literally rips right above my entry, I'm out, right? Very similar to what Todd was saying, because that's exactly was what happened here, right? Like I went with the wrong direction, and then it literally ripped for the rest of the day. Buyers were in control.
Yeah, and it would have been a perfect entry for the long.
Right.
Right there.
Exactly. So check this out. Really cool too. The whole break and retest. Right. So we've been seeing this a lot. But before we go any further, all I wanted to touch on is just because you are entering a supply zone does not mean sellers need to show up, right? And that's going to happen, right? You're going to get it wrong every once in a while. And the important thing, right, is to remember the best trader out there isn't the trader that always gets it right. The best and most consistent trader out there is the trader that keeps himself from vulnerable trading errors, right? Like so say I went short on this day and didn't have a stop loss, and then price literally ripped up to this level, right? So say I'm trying to justify this, and I've done this before. That's why I'm talking about it. So say I go short right here, right? And then price rips past, and then I go, it's all right. We got a supply zone right here. Maybe sellers will show up here, and then price rips past. So instead of getting out for minus 5%, now I'm getting out at like minus 50, 60, 70%, right? So these are the errors that will kill you, that will blow up your account over and over, right? So once again, don't expect the next zone to work. Sometimes it does, but every time you get lucky in this market, it is hurting you. I promise you that. I got lucky for the first couple years, and it hurt my mentality. It hurt my decision-making process, right? So don't hold in hope. Just kind of wanted to touch on that before we go any further, right? Just set your stop loss and get out. It's so important.
Yeah, we had numbers come out too right there, pre-market too, and what I've been seeing, I don't know, on these days that numbers come out, I've basically realized when numbers or news comes out, a lot of times I've been going straight to the fibs. Like if you pull that fib from that pre-market right there, about an hour to that top.
Oh yeah.
And see what it.
Yeah, right here, the fibs. Yep.
Yeah, and the day before too, man. They work out nice on on numbers and news days.
So let's break that down real quick. Yeah, so that the ABCD pattern, Todd, works great with the Fibonacci retracement. So what Todd's talking about here is, so we got a low, right? So we got a low right here on the S&P 500 at 408.02. If you right click and go to add drawing and go up to the Fibonacci retracements, right? It's this little percent sign. What this is going to do is show you a retracement from the top, right? So you'll go from the bottom all the way to the top of the candle, right? So, and now it's important to only keep your eye on the 50% and the 61.8%. So this is where we're looking, and it kind of makes a nice little zone there, right? So this will kind of tell you where you should get in on a long, right? Because you don't just want to chase a trade. Never just take it. If you're seeing buyers come in, that does not mean go long. That means wait for the retracement. Now, VWAP works very well. The Fibonacci retracement also works perfect, right? You can see there, Todd, perfect 50 to 61% retracement. Once again, we're getting extremely wicky. Look at all the wicks in this area of value, right? That right there is also a perfect indicator that buyers are defending this area very strong, right, with strength, right? So perfect indication, take the market long, and that's exactly what happened. We ripped right into 411, right into that supply zone. And then then it was just break and retest for the rest of the day. So then we broke out of this 410.86, and now all these levels are so important for the next day, right? So, and we'll get into that, right? So we broke past right here. Let me just get rid of this real quick. Delete this.
There's a couple things I'm noticing about this day on Thursday. So if you look at SPY and QQQ, they're actually very different in the way that they played out at the beginning of the day. I never actually realized this because I was only looking at QQQ when I was trading on Thursday.
Yeah.
But QQQ rips up in the open, like right in the first couple minutes, and just starts chilling right underneath the supply zone created the day before.
Yeah.
Whereas SPY only hit that supply zone, that same supply zone created on the day before, way later in the day, around noon. And
yes.
And I don't know. It's just very different to me. When I saw us holding price, and I saw all these long wicks on the bottom on the 5-minute candles underneath yesterday's supplies, that looked bullish to me.
Yeah.
I'll admit, if I was looking at this on just SPY, I'm not sure I would have felt exactly the same way.
Right.
Just because we were just at a completely different place. Do you see that? I never actually noticed.
Yeah. No, that's actually that's another. I went short on QQQ on this day, and that's exactly why, Darren. That's exactly why. So you can see. So what Darren's talking about here is we got this supply zone from the day prior, right? So why is this a supply zone? Because sellers came in very strong. So we have,
and that was a supply zone created for the FOMC minutes.
Right.
That I was expecting to see some kind of crazy action, and that's what happened during FOMC meeting. So I'm like, okay, I'm going to be watching that the next day.
So, and I like that you brought that up, because what he's saying here is volume with an area of value. This usually goes, okay, next day you can expect these sellers to show up again, right? That happens, right? So that definitely is a solid supply zone. That's what was going through my mind as well, because I'm going, hey, we got this huge sell-off. I'm at least looking for a retracement back to 313 before buyers step back up, right? And once again, it does not matter. Your analysis is probably 20% of your success on the market, right? It's the rest is all about how you manage your winners and losers, right? So price consolidates, which is telling us there's a lot. If sellers are stepping up and price isn't ripping down, that's telling you buyers are very strong, right? So they're just soaking up all those sell orders, and then it's a matter of the break and retest, right? And let's check the fibs on this one. So right click, Fibonacci. Yeah, so this was a little higher than the 50 and 61%, even though this one wasn't, right? So, oh wait, no, my bad. I drew them wrong.
Wait, how did you do that?
Yeah,
Okay,
look,
yeah.
it's perfect. Yeah, you caught that, right? So, yep, perfect Fibonacci, 50% retracement,
Oh, yeah.
rips. And then, and now with the break and retest, I know we like to use the 5 minute, but one thing I've noticed on the type of trading that I do, at least, it's sometimes easier to spot a break and retest on the 1 minute. But I would still use the 5 minute. So check this out. So we got this supply zone right here at 316, right? That's exactly where I went short. If you're looking at the 5 minute candles, you get a basing candle, right? Or a hammer candle right at a supply zone. That's telling me sellers are not strong, right? That's telling me buyers are prevailing, right? They're persevering through the sellers, right? Perfect. That's I'm not saying always take this setup, but that's kind of giving me confidence that buyers are going to push through it. I mean, we hit it once, twice, 3, 4 times. Fifth time, door breaks, bam, volume comes up, and then let's see. Just for giggles, real quick, I want to check.
Those high tight flags are strong.
Yeah, absolutely. Yeah, so, and then it was literally break and retest for the rest of the day, and then I got faked out. Where was it? Let me show you guys this fake out that happened to me. This was bad. And then this is where I was kind of like, okay, I'm not feeling it. I'm going to take a step back. Oh, this false breakout right here. So this is kind of what we talked about with, I'm going to pull out the 1 minute just to kind of show you guys what was going on. And this goes right back to your style of trader, right? I don't like to keep myself vulnerable, but this is what happened to me. So, and I even threw this out in the Discord. I was like, okay, if price holds above 410.86, let's go long, targeting 411.50, right? I literally put that in the Discord. So then, so price defends here, right? I go long, but the volume wasn't really there, right? I mean, volume picked up, but it was selling volume. So I go long right here, and then price falls below, right? And I get stopped out of my trade. I'm out, and then literally price rallied for the rest of the day. Blew past my target, and then some. So it's gonna happen, because the way I'm, and honestly, sometimes this happens, right? So in a trending market, right, where price is making higher highs, right? You're looking for a breakout, break a retest, and go long, and then it comes back down, but doesn't make a lower low. So this is one of those scenarios where just because I'm going long right here doesn't mean my plan is still valid until we break below 4010, right? So that just kind of faked me out, you know what I mean? And once again, these things happen. It's how you deal with them. But yeah, price.
That's why, like, sometimes when I look at my risk to reward, I want to take a setup, but if my risk to reward, even if it's trending in the direction that I want, if my risk to reward is not right, if I can't accept the loss that I would take to find out if the trade works out in my favor, then I just won't take the setup.
Yeah.
I'll just sit and I'll watch it rip.
Yeah.
Like, I didn't get was it Thursday when we rejected that 315 supply zone, or 415 on SPY?
Yeah.
Friday.
Yeah.
Friday. So so I had this demand zone in pre-market, and price started ripping at this. It started ripping in the first. I think if you go to the 5 minute, you'll see it started ripping in pre-market already.
Yeah, right here. So
wait, was that the day? Somehow I thought that that my risk to reward wasn't right. I think it may have been. Oh, it may have been on QQQ. Wait. Man, I can't.
Yeah, that's all right. So here, let's break this down. So
basically, what I'm trying to say is,
you're saying
my risk to reward wasn't right. Like, if I was trading futures, I would have gotten in. I would have gotten in
at
earlier.
317, right? But since you're already up $1, going long here, you gotta wait till you could potentially wait for price to come all the way down to 317 before you get stomped out. Yep. 100% agree.
It just wasn't setting up right, and the risk that I would have to take was just too big.
Yep.
And I was like, no, I can't take it. And my next setup, I was just open for my next setup, which was that short. But
that's
sometimes it happens like that. It doesn't fit your criteria, and you just don't take it.
Yep, absolutely, and that's the beauty of trading. It's up to you to get in the trade, right? So it's up to nobody else. That might be a reason why I end up going with SPY this day. So so basically the way I traded SPY right here on Thursday. Well, so I'll tell you. So first thing I did was identify my market conditions, which were overall bullish, right? We had this huge rip, and we were consolidating above this area. Okay, so we ripped. We had end of day right here. Let me just label this. Yeah, because this was a really good day. This day was all over the place, but it was. I'm gonna break down how I was able to identify a bunch of opportunities on this day. So we're gonna make end of day blue just to let that stick out. I'm just gonna get rid of some of these because, they actually end up playing a vital role. So, anyways, okay. So price ripped. So I'm identifying market conditions, right, which is telling me overall bullish. We're trending up. So in the event that we can hold above pre-market high, I want to go long, right? So just like Darren was talking about, futures, this would have been a perfect double bottom. But we're not able to get in the market that quick. And I don't want to go long right here because we're below end of day, right? So anytime you open below end of day, there is a higher probability that sellers are going to prevail, right? So I'm not thinking bullish, even though so 415 was a really strong supply zone. I was looking for sellers to defend it, right? Going back to these 2 days, right? 415 was extremely strong. If and when price can come into 415, perfect short. So if I'm going for a long here, it's got to be quick and it's got to be on point. So the way I did it here is price ripped. Right, I wasn't comfortable with, chasing it, and I'll tell you why. I was on QQQ. We were literally ripping into a super strong supply zone. We had pre-market high all the way up here. Supply was right up here. Right, so I didn't feel that confident going long with all this supply up here. So I was like, the only way I'm hopping in this trade is if buyers, if the candles tell me to do so. So once we ripped and consolidated, and I posted this trade in the Discord, it was like 70%. And the reason I posted it is I wanted to show everybody how all what you have to capture is a dollar move, right? So I literally go long here and I get out here, and it's a 70% return off of, let's see here, it was off $1.12, right? And then, so captured that move, ABCD pattern once again, right? You got A, you got B, C is the retracement, and then you go long. And then we got this massive sell-off, right? And then this was a perfect head and shoulders pattern in a very strong supply zone. I threw this out in the Discord too. I was like potential short, and it happened so fast, right, that I wasn't able to capitalize on this short. What I did hit was the VWAP rejection, and that's fine too, right? So if you miss a trade, that's fine. Wait for the next opportunity, right? Just like Darren just said, right? Like, I don't feel comfortable with this trade. I'm not going to go. So if I see sellers come in, I'm not going short here, here, here. Only place I'm going short is right here. If I can't get right here, I'm not entering because, that just is going to skew your risk reward like crazy. So, yeah, and then price fell right below VWAP, right? Consolidated, ripped right into VWAP. This is when I took the market short here, targeting pre-market low. And that was a solid trade right there. And I love these VWAP rejections. I used to not like them. I didn't feel comfortable with them. And that's why it's really good to step out of your bubble and try new things, right? And then the rest of the day was literally just zone to zone to zone. Right, so all those specific areas from the day prior played such a vital role the next day. I mean, literally,
yeah, they really did, especially on QQQ right there.
Yeah, it's literally textbook. So here, and then VWAP rejection, right? Price comes below VWAP, consolidates, sells off. Then price comes right back up to the zone, right, that we broke, retest it, and then sells off. Right? And then comes down to this area, right? Where this was a perfect potential long. I like that, what you put, Darren, in the losing trade section. Shout out to you for really utilizing that and journaling, right? And not only that, and we talked about it earlier, like what journaling does for your mentality is so important, right? It really helps you break it out. But we'll touch on that after the review. But perfect cup and handle. I know this is one of your A+ setups. You want to run through it?
I mean, so I was looking at QQQ. I saw all those candles to the bottom side.
Look at that.
And I also put in my journal that if we're in an uptrend and you have a demand zone in pre-market, usually buyers will respect that demand.
Yeah.
And then price will rip up. Especially if you're in an uptrending market, buyers will wait for the first sign of buying action in a demand zone, and then they'll take it up from there. And that's what I was thinking.
Yeah.
And what I also learned from the past in doing these cup and handle setups is usually your risk to reward is skewed just because, man, you might even have to go. I don't know if you can go into the Discord to see, but basically the reason is when price comes back, it doesn't always come back to the bottom of demand. Right. It comes back like halfway.
Yeah.
So now you have to think, all right, is your stop, like where is your stop?
Yeah.
Is your stop below the bottom of the cup, or is your stop
pre-market
somewhere less than that?
Right.
So the reason these setups are tricky is because risk to reward can be tough.
Yeah.
But that's why I always do really tight stops on these cup and handles. And honestly, I would take this setup again. This is an uptrending market.
Yep.
Only reason that we touched down below was, I think, because of the volume we got the day before.
Yeah.
But I don't know. I journaled the trade. I recognized that pretty much every single one of the criteria was there. It just didn't work in my favor.
Well,
and that's the 15-20% of the time that this trade doesn't work. The rest of the time, I'm going to absolutely slam it.
Absolutely. And look at that roll 316.82 played later in the day. Right. So, and this happens to everybody. And like I said, it's not the trader that gets every trade perfect. It is the trader that keeps himself from getting hurt. Those are the traders that are consistent. If you know what I mean, these trades are going to happen, but you know what? You'll see this setup again and you'll make 100-200% on it. I promise you.
Yep.
You know what I mean? It just is what it is. I 100% agree. We're in an uptrending market. I took this long as well. And the reason I took this long right over here, because once we ripped up into this area at VWAP, this 318.45, right? I played the market down to pre-market low, and then once we got this Bayesian candle out of demand and off 316.82, I was like, hey, here we go. Waited for the candle to close and everything, and look, still didn't go my way. And I literally put in the Discord, hold on, I just gotta read it because I said, hold on, you guys are gonna laugh. You're gonna laugh at this, Darren. So hold on. So let me go to, it was a QQQ call out. So let me just go. right here. So I put long targeting 317.18 or long targeting 318. So the picture was literally me going long at 316.59 Basing candle. Volume stepping up, wiki in demand, can't make a lower low. SPY buyer stepping up as well. That's our edge. And then I literally put under that, still keep a tight stop. No such thing as a perfect setup, only highly probable. That's literally what I said. And it was a perfect example of that, right? So went long, Basing candle, targeting 318, which was like VWAP. Or I'm sorry, it was right here, targeting right here. And then price fell below, kept a tight stop. I took, maybe a 10% loss on this. And then that was it, and it's going to happen. It's completely fine. I'm not worried about my losing. I'm not worried about my losing trades at all. Instead, only thing I'm worried about is not learning from them. If I'm not learning from them, I'm deemed to repeat them. Right. So, no shame in that, dude. That was a perfect setup. You stuck to your plan. You stuck to your rules. And that's what's going to make you successful for sure.
Yep.
And then,
hey, I know I mentioned it yesterday, but I'm just curious, like if anybody listening in, Rob or Big Huss or Todd, do you want to review any of the trades that you guys made, or just go over trades that you made this week?
Yeah.
It might be a good opportunity. I know we haven't done it before, but
absolutely.
I think if you guys want to. Don't mean to put you on the spot, but I don't know. I think it'd be a good time.
Yeah. Did anyone? Don't all go at once now.
Go ahead, Rob.
Yeah, go ahead, Rob.
Yeah, thank you. Yeah, good morning. The best trade that I had on the week was what you're looking at on Friday. I took that aggressive short from the top there on ES. And the funny thing was, I hadn't drawn a zone at that high point from some prior, inflection point in time. And what made me take it short was, I don't know if you guys play these, but I recognize fair value gaps to be quite strong as targets. And there was a lot of them showing up on this day on the 1 minute chart.
Right.
And so there was a bunch of them that had accumulated on that strong up run from open tick.
Yeah.
And then there was on the 5 minute, I think there was, let me see here. Or it was on the 1 minute, I can't remember. There was a couple of basing candles.
Yeah.
And that first one, I kind of liked it. Because
what,
as
this
you
one
can
right
see
here?
Down in the volume bar, it was strong selling volume.
This one right here,
Yeah.
Rob?
There.
Nice.
So I took that one, and then of course I got stopped out.
Yeah.
And then I looked a little higher, and there was, what did I see?
Maybe this head and shoulders.
But anyway,
yeah.
I just felt that there was strength somehow in it coming down, because as you can see the curve of the price, it was the momentum was faltering, right?
Yeah.
So I thought, well, okay, I'll try to get in again, and I really can't say exactly why I got in, other than there were these fair value gaps below me. And so I did. I got in there, and the price all of a sudden, just as you can see in the first two red bars there, aggressively came down, hit the first fair value gap right away.
Yeah.
It came back up, and I thought, well, you know what? I'm just going to wait to see what it does. I was willing to stop out even, right? If it went past my stop.
Yeah.
So I just waited for it to come down to the other ones that I had drawn.
Yeah.
And it just kept on ripping lower. And in the process of doing that, it was setting up its own fair value gaps to the downside. It was so aggressive.
Yeah.
Right?
Yeah.
And so I was drawing those in and just waiting for price to keep coming down. There was 5 fair value gaps, actually 6, below the top of that, before below the top of that peak that had formed prior, from previous day and from overnight.
Yeah.
And I just waited for the price. Actually, I left and I did some wood cutting, and I left my desk for a while.
Yeah.
And I kept checking on my phone, and it just kept charging right through these fair value gaps. And there was only one left, and it was down at 41.3750. And I thought, I just can't hold on anymore. That was just way so long. I was already in for 30 points on this run.
Right.
And I thought, you know what? I'm going to hit for between my last two, and that was 41, 45, 25.
441.
And I thought, and it hit there, and I thought, oh, well, thank God for that. That was great. I'm so happy with the day. And then I just stuck around and watched it. The pressure was off.
Yeah.
And it never even hit the last fair value gap. It came within one tick of it.
Yeah.
And then it turned around. It had a nice basing candle on the 5 minute.
Yeah.
Or was it 5? Just a sec here.
Yeah, look at that. That was perfect.
Yeah, there was a nice big one on the 5 with good volume.
Yeah.
Just above my fair value gap. So it took off from 41.38, and my gap line was at actually 37.25.
Yeah.
So, I didn't want to take it.
Oh yeah, you're
again.
talking. Yeah.
I wasn't didn't want to push my luck. So,
yeah.
I was really happy with that. But as I was saying, I'm finding fair value gaps on the 1 minute really, really strong magnets, and I always draw them in. And when there's any kind of sign of an inflection point, especially when we're at a zone, I take it as an extra confirmation that we're going in that direction, back towards that.
Yeah, absolutely.
Yeah,
absolutely. And what I love is that you were able to see right in the beginning. Right, you're like, okay, and I just to back up for a little bit. This what was it? 4187 was a massive rejection area, right? Once, twice, 3 times on the 4-hour time frame, right? So definitely an area we're not just gonna blow past. So I was, I also had a strong eye on it, and then as we were ripping up into it, you can see price rips right up, and then heavy volume comes in. Boom, nice little head and shoulders. Shout out to you for holding on to it. You know what I mean?
Where did you get that 80, that 89, 87, 89 level from? Did you pull that up from February?
Yeah. So over here on the 4-hour, we got, hold on. So let me see. This goes all the way back to this guy right here, 9/13.
Okay.
Yeah. So September 13th. We got what is that? December 13th, and then we kind of broke past it over here, but still definitely hit it. Reject. Right here. That was a good one right here. Back on January 16th, and and it looks like we got some more coming ahead in that area, and then back here 4-4. So we definitely rejected it. Oh, wait. No, I was way off. Sorry about that. But yeah.
Yeah, I hadn't gone back that far.
Yeah.
I'm still, I'm just still in the beginning stages of drawing zones. I haven't gone back a long way. I know that if we get into a serious bear market and we go below our March lows, we're going to be pulling zones out from last year for crying out loud. Yeah, it's going to be crazy.
Absolutely. No, I love that you were able to hold on to the trade and see the conditions, and just keep playing it down.
Well, it was so strong, and I really didn't see anything in the way. Looking at 50 minute, it just basically went straight up from the previous day, right? There wasn't, as you guys were talking about, there wasn't even a retest on that zone. It went through at 41.52.
Yeah.
It just charged on through, and it was pretty strong. So I just held on. I thought it was going to come right back down, and I didn't know what. That's a long run.
Yeah.
So I wasn't putting a lot of weight on it going, 50 or 60 points. 30 something was fine for me.
That's big money on futures. Good Lord.
And that's the thing. That's what a market imbalance entails, right? So these opportunities present themselves daily, right? So let's talk about that. So I'm just going to pull up SPY real quick because once we broke pre-market low here with the break and retest, that was a clear, that was, hey, we're going to take this down to previous day zone. You know what I mean? This is a $5 move on, the ETF, which is literally around 300% on an option or, a future. I'm sure it's, similar. And it's really important to remember, right, that these opportunities do present themselves a lot. I've been working really hard on, leaving runners in certain cases like this. A good point here is once we broke below this 412.41 pre-market low, price pretty much will always be drawn to the next zone, right? So those market imbalances are great. Absolutely love them. And it's good to take low-hanging fruit as well, right? So one thing I've been working on a lot is just because I'm up 30%, right? Don't just take it, right? And Rob, you were able to, look at the next zone and go, hey, is there any reason to get out of this trade? You know what I mean? And there wasn't in your scenario, right? And the way you were visualizing the market and your perception, you were seeing it completely clear. And that's really good trading right there. That is how you crush it. Absolutely. So that's wicked good.
Yeah, I'd never seen that many fair value gaps in one day, all stacked up on top of each other in the same direction. It was just crazy. I thought, wow, this thing's got to come down.
Yeah. Absolutely.
Shout out to you as well, Rob, for trusting your intuition at that supply zone at the top. Because I also captured that short right from the beginning, and I felt exactly the same way. I was like, I feel like it's going to turn around, but I don't really have enough confirmation. And then I thought to myself, I was like, you know what? This is the game that I'm in. I put risk on the table to see if something's going to work out, and you have to trust your intuition and attach risk to that to eventually test your edge, and that's what we did. And I think it's good. It's a good. It was a good move. You got to trust your intuition, build that.
Yeah, exactly. They call it discretionary trading. I think I like when I'm well equipped to use the both of them. Strategic and discretionary. Because it's like using logic and intuition together. When you have you have your knowledge of the market, your probabilities in your head, and then sort of like that creates a stew, that your intuition pulls itself. It's
subconscious
indications out of.
It's like using your subconscious mind. And I know Mark Douglas dives so extensively into the beliefs and the subconscious. It's super important. But when we talk about intuition, what we're really doing is talking about our beliefs and the way we're perceiving the information the market's giving us, right? So that is that's a great way. Sometimes we're like, oh, I don't know, but it looked bearish. No, in reality, every moment that you've traded leading up to this is you're looking at the market through that lens. That's why I believe so much in journaling your trades. Everybody knows how often I'm talking about, reading these books, journaling these trades, get behind the charts, and just continuously shoot at it. Because anybody can call out a trade and hit it, right? But the one that goes over his journal continuously, figures out where he's struggling, how to become a better trader, right? Like everyone's on their own journey, right? So, building that intuition and building and just validating your perception and how you look at the market is the difference between the consistent trader and not, so.
Yeah, absolutely. Doing that is getting yourself clear on how you understand what's working and what's not working.
Yes.
And that's where you pull your decisions out of that area, in your head.
Yes.
Like you said, you may not be aware of it consciously, right. But when you're clear on things, like for example, the screen you just had there with the double top on SPY, that first basing candle, you think, oh, that's the great place to go short,
right.
At the top there.
Yeah.
And that looks great because it's red.
It does.
You know, it's a basing candle, and yet you get stopped out. If you get your stop just, like in my case, a couple of ticks beforehand, you got stopped out. And then you see the next basing candle.
Yeah.
If you're, okay, well, gosh, what's going on here, you know? And, well, like Darren said, you either just, you got to play.
Yeah.
Or you got to be a spectator.
Put money on the line.
So you just do it again. I mean, sometimes I've gotten in trades 3 times before the thing actually takes off. Yeah. And it's nothing I did wrong as far as what I saw, you know. Exactly. It's just that, my basing candles just keep getting steeper and steeper until finally, after, it goes a ways against me. And after 3 times, I figure, okay, well, it's just going to go through the zone. It's not going to bounce, right? So, but you have to be willing to pay to play in that scenario. And that's why, you need to have, as Todd does, keep your stops nice and short.
Yep, absolutely. Don't want to, put
Very
yourself.
well said.
Yep, absolutely. Mm-hmm. And that's what we do as traders. We literally put ourselves in position that are highly probable based on our conviction, right, of what we've done. I mean, we all know how to identify the areas. If not, you can ask anyone on this team. It's all about just building that conviction within yourself, that confidence, right? It doesn't just come overnight. It takes time. But, the more you do it, the better and easier it is to identify it. And then, you just keep moving forward, man. I really love this team that we're all building and, just moving forward. And this is really good stuff.
Yeah, I'd like to go over a trade on that ES, and I'll kind of show y'all what I was looking. I took a long on ES that day.
All right.
Was it Friday?
Let me pull this up. Hold on. Okay.
Yeah, it was Friday. Yeah. I took a long at 41.41. 41.41.
Oh, yeah.
And I took it off the double bottom on SPY off of the S1 pivot because it looked so clean.
Yeah.
And I kind of got a higher low on the lower time frame.
Yeah.
And I got like 12 points off of that, but I haven't been trading much. But that's the one I did take when I got home.
That's a slam dunk trade right there. That's a slam dunk trade right there. And I think we talked about this last week, right? So obviously capturing these large moves are great, but we must remember, right? I mean, don't get me wrong, 100% a day, that will change your life, but so will these, because these little low-hanging fruits, right? These double bottoms in demand, right? This would have been a perfect trade targeting right here. I was at a doctor's appointment. I was not able to see this. But this right here, that's a perfect trade. And you know what? If that's your plan and you stick to it, that is success. The longer I realize, or the longer I trade, the more I realize, the more I stick to my plan, the more successful I am. When I stick to my process and don't gamble, right? Or don't just go long because buyers are there, or don't just go short because sellers are there, right? No, all right, double bottom, I'm going long here, stop loss below the lows, let's go, right? That's literally all it takes.
Did you get in on the first basing candle or in the second one?
No, I got in. I was on the 2 minute, so
okay.
I let it go away from me, and then I let it came back to me. And once took out that on a 2 minute, once it takes out a narrow range little red bar, that's my entry.
Oh, so hold on. So you're saying which one, Todd? This one?
See that little red one?
This one.
Yeah.
Okay.
The green one took out that red one. That's where I was at.
Perfect. And you know what? I like that strategy there, because you're not just hopping in here, right? You're going. Yeah. I'm gonna wait for buyers to take sellers out.
Right.
That's cool. Yeah.
That's how I enter every trade. That's how I enter. It's either a green bar taking out a red or a red taking out a green.
Really?
Stop right underneath the top of it or right underneath.
I like that strategy. So instead of going, hey, here's 2 greens, right? This is bullish. You're going, no, I'm going to wait for a green to take a red out.
Right.
Nice. That's good.
Especially on a narrow range bar. I like the narrow range, you get a bigger bar and you get a little small bar.
Yeah.
That's the ones I really like.
Yeah. Yeah. What do they call those, 3-bar plays or something? I forgot, but
yeah.
2 bars.
I don't know. a narrow range bar and a pullback is
Yep.
how I always,
Yeah.
you know.
Yeah, no,
That's how you usually enter everything.
That's really good stuff, man. That's really good stuff. That's awesome. And yeah, I just and I just wanted to let everyone know before we were going to wrap it up over here, but yeah, I'm working on just developing a bunch of little like real little mini courses, right? On like probably 15 minutes, just really fleshing out every strategy that we trade, right? Like, so the end of day rejections, supply demand rejections, double bottoms, double tops. I'm gonna break out a lot of candlestick analysis stuff. I just want to continue to add a lot of value to the Discord and to this team, right? So anybody joining, or just to continue to solidify our edge, is all I really want to do, and just help us all get to wherever we got to get. You know what I mean? Just to continuously be consistent, identify these trades, right, and just hold ourselves accountable. Right, really good stuff, and I really want to get to the point where we're all just, really using everything on the Discord for the better, right? And even if you don't feel comfortable logging your trades in the losing section, that's fine, right? Like, I'm fine with doing that, right? And because I know how much it's worth and how much it's going to help, right? And set an example, right? Like, I'm losing trades, right? I just want everybody to know, like, it's so important to break them down, right? Like, what happened, right? Why did you fail? Is it okay, right? Like me and Darren talked about before, that was an A plus cup and handle in demand. That's our edge. We're gonna take it, right? That's okay, right? But are you losing money because you're not sticking to your plan? See, that's not okay, right? So it's really important to get all that energy out and kind of release it from your behaviors, right? It's really, really powerful stuff. So going forward, right, if anyone has any questions on how I journal, I will show you. And I really want to thank everybody for the involvement today, for showing up. It's Saturday. You're still putting in work, trying to become a better trader. That right there is what is going to get you to long-term success, right? So I just really want to thank everybody for showing up. And have a good weekend, and I will see you guys on Monday.
Shout out to everyone who joined the meeting. Have a good weekend.
All right.